What's good, people? Checking in for another episode of Volnay Live. Excited for tonight's episode. Going to have a couple cocktails. Going to talk to the boys from HRV Homes. They are a couple of guys that are doing developments all over Boston. Been in the business for a while, so really excited to chat with them and let's see that. And hear about their story. I've actually known them for a few years now, and but actually don't really know the whole how it got started story. So excited to hear about that, and hopefully they'll be joining in shortly. Yeah, man, what's up, bud?
How are you? Living the dream.
So I think we'll have to flip flop between you first and then go, because I think we can only do one.
Oh, you can only do one at a time.
I think so. Yeah.
Okay.
So we'll start with you, and then we'll kind of bounce back and forth. We'll bring Ray on.
That works.
But how's everything? Here, cheers. You got a cocktail?
Absolutely, I got a cocktail.
Yeah.
Cheers, dude. Friday night.
Yeah. So,
I feel like I'm living in Groundhog's Day.
Dude, it is insane. I keep stopping myself, being like, "Wait, what day is it? Is it Friday? Is it Thursday?"
We had a podcast recording earlier, and Mark, I texted Mark and I was like, "Where are you, dude?" He was like, "Oh my God, I didn't even realize what day it was."
Yeah. Oh yeah, for sure. Well, let's get started. We'll chat about everything, but let's hear the HRV story. How you guys got started, for the people who are going to check in or listen to this recording later on. How did it all start? When did it start? And kind of run me through how that all got going.
Yeah, so I bought my first 3-unit building in 2008 at the bottom of the market. Ray and I weren't partners at the time. I graduated Northeastern in 2007. So basically a year after I graduated, shit hit the fan. And I was just looking to not pay rent. I still had my corporate job, luckily. And I was probably cheap labor to them at that point. So I bought my first triple decker with an FHA loan, put 3.5% down, and pretty much just rented it out. Lived in 1 unit, kind of did the whole house hacking thing. Mm-hmm. And then a couple years later, Ray and I met at our corporate job. And so 2010, Ray and I had gotten close. So 2010, I approached Ray and I was like, "Oh, I'm doing well with this triple decker that I'm living in. I'm thinking about doing something else. I'm interested in real estate. Do you want to do something together?" And so that's kind of when things formed. And we formed the company in 2010, did our first condo conversion in 2010, kind of hit the ground running. Didn't leave my corporate job until 2015. So spent the first 5 years kind of building the company. At first, it kind of started out as a hobby, really. We really didn't know where it was going to go. We just liked the thought of real estate, the opportunity of real estate. And so we started with the one, and then we bought a couple rentals. Then we started doing some other stuff. Started doing some ground up, and got to a point where we were so busy with, I basically had 2 full-time jobs. Yeah. And so got so busy where, something had to give, and it was kind of a good opportunity, a blessing in disguise at my corporate job. So I was going to leave any located. So, so it allowed me the opportunity to kind of take the plunge in 2015, and been doing it full time ever since.
Nice. So let's talk about one of the early projects, whether it was not the first rental, but the first time you guys decided to jump into a development, whether it's kind of conversion or one of the early ground ups. How did that go? And kind of run us through it.
Yeah, we lost money.
Okay. What happened?
Lost money. Looking back, so I'll give you this backstory. So it was a burnt out triple decker in Dorchester. And a broker brought it to us off market. The owner was just kind of looking to get out. It had burned. He started to do some work like windows and stuff like that, but really didn't do much. He didn't owe anything on it. So, we went to a number of lenders, and, this was 2010. So stuff was still really tight. We had no track record, so no one would really lend to us. So we were super lucky that actually the seller self-financed, held the note on the building for us. So we paid him interest, and then we ended up funding the entire renovation costs on our own dime. So Ray and I basically spent everything we've saved. We maxed out our credit cards, pulled money out from our 401ks, dumped everything into the project. Um, you know, Looking back, I think we may have overbuilt a little for the neighborhood at the time. Um, they were all 2-bed, 1-bath condos and a triple decker. And then, so what happened was there were two parking spots, and the first 2 units sold pretty quick. So we were lucky that we were able to sell or pay off the principal loan on it, but we still had all of our credit card debt and everything, and we ended up having to hold that last unit for a year before we could sell it. Looking back,
just because it wouldn't sell, because couldn't you drop the price?
We kept dropping the price. It ended up, it kind of turned into the winter, the holidays, winter, and things slowed down. And remember, 2010 was still kind of
there weren't really a lot of condo buyers back then.
No, and there was and this neighborhood, we were kind of in a fringe neighborhood in Dorchester at the time. So, but we were stupid, because knowing what we know now is we own that last unit outright. We had no loan. So we could have refinanced that unit, pulled the money out, paid off most of our debt, and then rented it out and then sold it. But we had no idea at the time.
Yeah, so. And that's also a more mature thought. Like, as you and I would do that now, not back then. You're like, I need the cash. You're literally, you're probably not barely making rent. You're like, I need the money.
I'm freaking out. Like, I have my credit card bills. It's like, luckily we still had our corporate jobs, or else we'd be really, really, effed. Yeah. So, we held the building. We lost I think we lost like 25 or 30K. So it could have been a lot worse.
Yeah. So let's talk about the business now. So what are you guys working on now? Are there different aspects of the business? And then where do you guys see the business growing? I mean, we can talk COVID, we can talk recession, but let's start with the current business. Where are you going to see it in 3, 5, 10 years?
Yeah.
And then we can get into some COVID stuff.
Sure. So I'll tell you right now, obviously, long-term, we're rentals. Long-term, we want to grow our asset management business. So we pretty much have 2 arms of the business. We have our development business, and then we have our asset management business, where we have a bunch of, our rental portfolio. 5, 10 years out, the end goal is to have a large portfolio of cash flowing rental property where we can live off of that coming in, and the development stuff, we can pick and choose what we really want to do. Cherry pick the best deals, maybe do much larger deals, instead of the smaller stuff. Right now, up to this point, we've done mostly single, 2 families and 3 family, either gut renovations, ground up, land development, etc. So, I think the next phase is larger development projects. We want to get to like the 6 to 9 unit projects. I think that's the next step in the next evolution. Our thought process is it's the same amount of work to do 1 9-unit building than it is to do 1 3-unit building. And so I can do 3 3-unit buildings with the same amount of work as 1, 9-unit building. It makes more sense to kind of scale that way.
Yeah.
And so that's kind of the evolution of where we think the business is going. And then again, we have a couple projects right now going on. Obviously, some of them are on hold. Some of them we can work on. We have a couple holds that we're in the process of trying to lease up. So that's kind of where we're at right now.
Where are you guys looking for rentals right now? And what are you looking for when you're trying to find a good rental property?
It's all about cash flow. I know a lot of people are big on cap rate and stuff like that, but for us, it's all cash flow. we're
So
looking
explain to people what you mean when are just bottom line cash flow is what do you?
pretty much just bottom line cash flow. We care about return on investment, obviously. Some of our holds are, we have we have investors involved, so we're paying them. But the majority of our rentals we hold on our own, and what we look for in a rental is mostly cash flow, and then ROI as
Yeah.
well.
Yeah, it's rentals are really difficult to do with investors. It's just the cash flow returns get eaten up so much by the
Yeah,
investor. I think, if you are able to look at a rental property as a really long-term asset and you're saying, well, what's like what we analyze them is we look at obviously first cash, we look at the cap rate, we look at what the cash on cash return is, we look at the free cash flow. Then we dig into the next step and we say, well, what are we paying? What's our cash flow plus principal? Then we
yeah,
say cash flow plus principal plus appreciation. And we start to try to calculate that and say, well, what is the real return on this? And so,
yeah,
and that allows you to kind of make decisions a little more, a lot has more information.
yeah.
Because but it is difficult, especially if you have to have
It
investors.
is. I think you have to get into much larger deals, rental deals, kind of like the 600 and stuff like that, where it starts to make more sense to bring in outside investors. But
Yeah.
like the threes and the sixes, it's hard, right? And like you said, a lot of the cash flow gets just eaten up by your investors. The real, I guess, if you're, like you said, if you're in it for the long term and your goal is to kind of, okay, I'll take a short-term hit, and then in 5 years or so, I'll refi, cash the investors out, and then I'll own the building outright with all my investors gone. Maybe I know a lot of guys that are kind of doing that play as well, kind of sacrificing now to gain for the future. But to your point, if it's very difficult, especially in this market.
Yeah, so we've looked into doing that on some larger rentals, and it's like, giving them a preferred return as they scale through the process, and then at year 5
Yeah,
is the execution date, and at that point they've got a preferred return, pretty much a guaranteed return every year that hurdles, and you don't get paid unless they get
he's
12% return or something.
yeah,
So 12% a year IRR, and then when the building liquidates or you refinance, they get that money over IRR over 5 years, and then the building could be pretty much either they're out completely or it flips to a situation where it hurdles and it's like, well, now the split is in your favor going
yeah,
forward. And
yeah,
they still have a small slice, but just much smaller.
yeah.
But let's talk about like the partnership.
Okay.
So let's talk about how you guys, obviously you met at work. How
Mhm.
did how did that end up, coming together, and how did it work? How does it work so well? And how do you,
Yeah.
like, and do you recommend it? Like, do you think people should be going out trying to find, a partner to work with, or should they go on their own? Like, what do you recommend?
I think it depends. I think it depends what you have. It's all about your strengths and weaknesses, right? Ray's strength is, spreadsheets, finance, all that. He's very detail oriented. He's amazing with the numbers. He's really, I mean, his spreadsheet work is incredible. I have more interest in more so the design, project management, acquisitions, stuff like that. So, at first it was hard. It took a couple of years for us to figure out where those kind of delineations were. When we first started the company, we both tried to do everything together. And we realized it doesn't work that way. It can't work that way. There needs to be more like kind of quote unquote defined roles and responsibilities. So you can, a partnership is all about dividing and conquering, right? So, Ray's good at this stuff. I'm not as good at skilled at that stuff. So why do I need to be involved in that? Ray can just kind of we have weekly updates on the stuff that Ray handles, and we have weekly updates on the stuff that I handle. And if there's a big issue that comes up, then, we'll talk about it. But for the most part, that's kind of how the partnership has evolved. Um, I wouldn't recommend partnering with I wouldn't recommend partnering with somebody if one of the partners has already been established. I think the reason why it's worked so well with Ray and I is because we started with nothing and we built the company together from nothing. You know, if one person is here and another person is here, I think it's a lot harder because the person that's here is always going to say, okay, well, why do I need this person?
Yeah.
You know, I already know all of this stuff. So I think that's why it's worked so well. We've built it from the ground up. You know, we know what we're good at and we know what we're not good at. And that's, you know, that's kind of how we've operated. And, you know, sure, you always have disagreements. We have disagreements all the time.
How do you decide on deals? Is there contention?
There has been
is there
contention.
times where you've like put your foot down, you're like, this is a fucking great deal, and he's like, I disagree, and like you're like, you know,
it's actually really funny because it's like it happened 2 days ago.
Yeah.
And so because
I would freak out because like I'm such a control freak. Like I run the show and if I want something I execute on it.
Yeah.
And if I had to like get, you know, feedback, like even if a lender questions me deciding on a deal, I'm like, fuck, like what are you talking about? Like this is a great deal. So you know, how does that work?
It's tough sometimes, you know, it's that's what a partnership is. It's like a marriage, right? Like, you know, Ray, we always joke that's like Ray's my second wife, you know, like you know, we fight like we're a married couple.
Yeah.
So I mean, we ultimately we always try to be on the same page, but like I said, it happened 2 days ago. Like we're still making offers. We had an opportunity in Dorchester on a really good potential buy and hold opportunity that fell through, and that we bid on a couple months ago, and the broker came back to us, put an offer in. You know, we were probably 25K apart, and then the broker came back and was like, if you come up another 10K, you know, she'll sign. And
you're like, know, we're in a recession and it's COVID.
Yeah, I was like, well, and I actually did it. I put my foot, but I knew I had spoken to Ray, and Ray's like, no, we're not going up. So I when he called me, I said, no, you know, listen, like, I don't know what's going to happen in 2 months. I don't know what's going to happen in a year. Like we have to put our foot down. Like we've already come up, you know, this is where we're at. You know, we can't offer what you wanted prior to all this going down. It's just not going to happen. And 2 days later, I got a call, and someone else all of a sudden materialized and offered, you know, 20K more. And so, you know, I was a little aggravated because it's like, is 10K in the grand scheme of things, and that really going to make a big difference? Maybe, maybe not. So I was a little bummed, and, you know, I told Ray I was a little aggravated but he was like, you know what, the numbers are the numbers, and spreadsheets don't lie, and, you know, can't get emotional with real estate, right?
I think that's the key lesson there, is that you have to draw the line, let the numbers speak for themselves. Where you get screwed in this business is by getting emotional about a building or a street or anything, like, and then you end up overpaying, thinking about, like, I've so many times I talk to these newbies and they're talking through a deal and I can hear them trying to talk themselves into future value. I'm like, what's the value today?
Yeah.
What's the condos?
Not only what's the value today, but what's the value if the market drops 10%?
Well, now we're learning it's really important to be building to a 15, a 25% project ROI today, because when it drops by 10%, you're still in the money. Yep. And it's going to, you know, hopefully the deals turn out that way. You know, I think one thing you mentioned too, and this is a question for you, I think I've said this on other interviews and podcasts, is like, I think people don't need to jump into partnerships. There's you can partner on deal by deal basis and feel somebody out. So like, if you're looking to get in this business, even if it's your best friend, you don't need to establish an entity to build a business together. Like, you can just say like, hey, let's conquer this condo conversion or this rental. We'll do an LLC, we'll be 50-50 partners, and then go through that. And then the next one. And eventually, if you decide to, and it's going so well, it can form into an entity that you both own that owns everything. But there's no need to format something above everything else that says we have to do every deal 50-50.
I agree.
So until it becomes,
especially when starting out,
yeah.
Yeah.
So let's talk about the recession we're in now. What's your guys' outlook on the next month, 3 months, 6 months? Where are you guys at mentally on your developments, on buying stuff, offering on stuff? And guys, everyone who's on here, get the people on here, send in questions, anything you guys have. We'll get to questions after this.
Yeah, for sure. It's tough, right? No one knows. No one knows what's going to happen. No one knows if this thing's going to die down and then spike again in the fall, and we're going to get shut down again. Like, you just don't know, and all you can do is prepare, right? Prepare best you can. Like I was saying before, we're still making offers. Our offers are even more conservative than they were before. We have due diligence periods built into the offers. We have a bunch of, we obviously financing contingencies. We don't really, we don't have really inspection contingencies, but, making sure that we're covering ourselves, because you just don't know what's going to happen. If all of a sudden the credit markets freeze up and people aren't lending, banks aren't lending, okay, now all of your money goes hard and you're screwed. We talked to our lender last week, and he's like, yeah, we're still lending, but our LTV is a lot more conservative now. So we're looking for a little bit more down to kind of make us feel comfortable lending. So it's just, obviously, if everyone has a crystal ball, let me know. But, all you can do is just cover your ass. And, we were lucky where we had so much going on last year that we made a conscious decision to kind of slow down and stop acquiring and we said, okay, let's get through our current pipeline. Let's get the long-term assets that we bought stabilized and rented and cash flowing. And then early 2020, we'll kind of revisit and see where the market's at. So we were kind of lucky in that sense. So we have two development deals right now going, and then we have 2 long-term holds that we're looking to lease up that we've finished up the work on. So that's kind of what we have right now. And like I said, we started looking again, and we put that offer in the other day, and we are putting offers in on stuff. But again, it's just, you have to be ultra conservative. I think that the Boston market is still pretty well insulated. I think that there's still a lot of demand here. We had demand before all this happened, and now no one's allowed to work. And so, I know people obviously, have lost their jobs, and it's terrible. And, a lot of people are hurting, but at the same time, it depends on your buyer pool, right? The ultra luxury, I don't really think many of those people have lost their jobs, to be honest. Not yet. But
depends on how long this goes.
It depends on how long.
If people are back to work in the next month to 2 months,
yeah,
you're not going to see massive layoffs from those people in those companies.
And then look at the market. Look, the markets I don't know how, but they're rebounding.
Crazy. I saw that. I don't even,
it makes no sense to me. But it will, like you said, I think that if things trend in the right direction over the next 30 to 60 days, I think that will be okay. If things stay the way they are, then, it's just going to continue to get worse, obviously. And
what do you think about, I talked to somebody earlier today about this. It's like, you mentioned the deal that lost money early on. It was on a fringe neighborhood. Do you think that people should start being more careful with fringe neighborhoods? So like people, because like 3 months ago, like if it was a property on a fringe neighborhood, people were like going nuts for it because it
Oh
was like
yeah.
that's going to be the next.
Yep.
But that might not be the next in the next 3-4 years because it might just stop where it's at, and
Yeah.
then like Savin Hill moving into like the next areas in Dorchester, like is that jump going to keep going or
You because it depends because if think about it if the areas that are the good areas quote unquote drop 5%, and now the people that necessarily couldn't afford those neighborhoods then that had to go to the fringe markets neighborhoods can now afford those neighborhoods. They're not going to go to the fringe neighborhoods. They're going to buy in the neighborhoods they can afford in. Everything just kind of goes that way. I personally, unless it's like a long-term hold,
right.
If a development deal, I probably wouldn't even touch it. Personally, we've kind of consciously stayed out of those markets anyway, just kind of as our general business model in the past. But I mean, I would be ultra wary of them now. I mean, what are your thoughts? I mean.
So yeah, I mean, I think everything so I have projects in Dorchester that are more fringe areas, right? But they all work as rentals.
Mm-hmm.
So they're all developments, so the two large, we have three large ones in Dorchester. I got a 27 unit near Dot Block, a 51 unit on Washington Street, which is right near kind of Franklin Park area.
Yeah.
But that's a rental play. It's
Right.
2 years out from even getting started on construction, and then another year or so until it's done, and then it would be a rental. And
Yeah.
using today's rents, it cash flows. So and if once it's fully stabilized in 4 years, 3 years, who cares? You've got the upside. And then another 40 unit in Dorchester, same thing though. I'm into these things for, to make these cash flows as rentals, you need to be into them for 26 to 50K a unit.
Mm-hmm.
You've got to be low, and like that's not what people are paying. People are paying way
Are those
more
Section
than
8 or are those going to be market?
it would be market rents.
Okay.
Yeah. But yeah, I mean, I think if it's a development opportunity, and you need to be very careful if this can cash flow as a rental, because you're not sure.
You always got to run worst case scenario.
You're not sure that those are going to condo anymore. So just start being much more careful on that front.
Absolutely agree.
Your price per door is not what it was 3 months ago. People are like, oh, 100K a door, 125K, 150, 200K a door. That's not the price anymore. And it is what it is. I had a parcel in Dorchester in an up and coming area, not still in a fringe area. And I had an offer in pre-COVID. They didn't take it. Came back to me post-COVID. And then they came back and they were like, oh yeah, so we're going to take your offer. I was like, well, my offer is 60,000 less for the land.
Yeah.
Because they're like, well, what are you talking about? You agreed to that price. I was like, I agreed to that price pre-COVID.
Yeah.
And pre-recession. You are the ones that waited 4 months to come back to me, and I'm breaking my word. Like, no, you passed at the time when the number was that number. Yeah. So, I think that it's you just got to be careful out there. But there's opportunities now, right? There's opportunities. Is to there are people that are scared. There's going to be people selling multifamilies who aren't getting in rent and are just going to be like, not interested, right? They bought one or two. They're missing March rent, or they missed April rent. They're going to miss May rent. They're going to be like, I'm out. I'm not going to risk.
Think about what's going to happen with all those Airbnbs.
All of those Airbnb.
Done.
Oh God. Those people are screwed. I have been an anti-Airbnb person for a long time. If you ever heard me talk about it, I hate Airbnb. I think it's a stupid concept. I think it's the definition of what real estate isn't. Real estate is for long-term hold assets that are secured by leases. The Airbnb method is the stupidest thing. It's literally you're taking something that's supposed to be removing risk and adding more risk.
It is. It's super high risk.
So
and now people are paying. So,
and I've always said I didn't know that COVID was going to come.
Right. Right. Do you
you
think
know,
that?
but
Uh,
you didn't,
Go ahead. No, I was going to say, do you
you know,
think
you
that it's
didn't
going to
know that.
take? Do you think it's going to take a while for sellers to catch up, and because obviously everyone wants $1 million for their building right now. Do you think it's going to take a while for that to catch up? Where it's like, wait a second, no one's biting now, and you start seeing the prices come down, or do you think
Yeah.
it's going to happen sooner?
No, I mean, I think I think you'll start to see people coming on the market at much lower prices very quickly when rent doesn't come in these properties into May and June, because these
Yeah.
people are going to start looking at it and they're not going to be able to pay the mortgage because they only own one rental and they don't have the reserves, and
Yep.
they're going to say, I'm not going to lose my credit over a mortgage. I'll just sell it, even if it
Yeah.
went up in value over the past 3 years. It might be worth $1 million. They might sell it for 9 because they're still up 100 or 200K.
Right.
So,
Yep.
um, you know, so let's answer some of these questions.